All right, what up, everybody? Jeremy here with Escape Velocity Trading, coming at you for another market bias update report for Sunday, September 22nd. It is 4:30 p.m., meaning the futures market has been open for about an hour and a half. Before we dive into charts, as always, let's do a quick review of last week's trading. So last week, I ended up having a total gain of 14,128 and 50 cents. Only had one loss for the week out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trades. So one on 14 and lost on one. Fantastic trading week. Was honestly a pretty easy week to trade and be successful on with the rate cuts coming in hot. The market loved the 50 basis point cut as opposed to a 25 basis point cut, which the market was basically a coin flip between the two on which one the Federal Reserve was going to do. So markets celebrated. Again, ended up having a banner week. Great trading week. So with that, let's dive in. And we are going to go and check some charts and figure out what we can expect moving forward here. So diving in, looking at the S&P. Obviously, at the all-time highs here on Thursday, we put in a new all-time high on the S&P 500, coming up to 57.97 and 50 cents. Friday had a little bit of consolidation, taking profit at the top of the range. That's to be expected. And right now on Sunday, we are just in the middle of Friday's range, trying to decide if we want to actually have some kind of a retracement. So from the lows here, we have gone uh, over 400 points on the S&P futures without a significant retracement. We've had one bar of red here on Wednesday, one on Friday, but those have been largely ignored and the market has been pushing past them. We are now finally entering into overextended territory on the RSI. And remember that above 70, while that says that it is overextended, that does not mean necessarily that the run is over. Markets can be overextended for large periods of time. You don't have to look back very far in history to see on the daily chart here that back in June and early July, we were overextended for the better part of 2 to 3 weeks while the market continued to push and run higher. So this doesn't mean necessarily sell right now, but it does mean maybe start to be a little bit cautious at the top end of the range, scale back position sizes a little bit, and or wait for a little bit of a retracement, hopefully coming down into the 9 EMA around 56.90. I would love to see a retracement right back down into that like 5700 to 5690 zone, get a little doji or some other form of signal candle there, and then bounce and be off to the races. But I'm going to be cautious on the S&P 500, probably only doing day trades with really controlled tight stop losses because as you guys probably know by now, if you've followed this channel for any length of time, I do not like buying at the top end of charts. That is not my forte. I dislike doing that. That does mean sometimes I miss momentum plays when you are pushing all-time highs and then break out and run with open air above you. But for me, I like to buy on bounces where I have a controlled risk and a lower risk profile to a higher reward profile. That is just personal to me. That is my style of trading. So I will be cautious on the S&P here. That said, if we do break out from the wick high here from Thursday at 57.97 and 50 cents, there is open air above, and we really don't have any price history there because we are at all-time highs pushing right on up here. So we are now in price discovery mode on the S&P 500. Going out to the Nasdaq, it's a little bit different story. We have actually come up and we are consolidating for a few days right here underneath 20,100. If we break out above that, I am going to be considering this potentially a buy and a catch-up trade in the market, looking for the Nasdaq to come back up and retest the highs up close to 21,000. So there's a good chance for a potential catch-up trade there. If we drop this down to, let's say, a 4-hour chart and just take a look, you can see that we are consolidating right above the 9 EMA, trying to hold on to that, trying to print a little bit of a doji candle here after several candles in a row of marked volatility. If we do get back above this 20,100 level, I am expecting a run higher, and I would expect that to push us back up into the high 20,000s up to 21,000. So interested in the Nasdaq moving higher more so than the S&P. Going out to the Russell. Russell has some catch up to do as well. It looks like on the daily chart here, we are pushing all-time highs, but we need to remember that is not the big picture. If we drop out to a weekly chart, we do have all-time highs up here at 2,460. I do see us probably coming back up and retesting that level. So I do think there is potential for a catch-up trade in the Russell 2000. But that is going to have a caveat because the Russell 2000 is going to be much more sensitive to economic data coming out. And as we will see here in a few minutes at the end of the video, I will go through the economic data that is going to be released this week. And there is a lot of it. So the Russell trade is going to be based very, very highly on what happens with the economic data that is going to be released this week. Going out to the Dow Jones. Dow Jones looks very, very similar to the S&P. In that same spot on the RSI, looking slightly overextended, still has potential to run. MACD still looks good, setting a new higher high comparative to the previous pivot, so still in bullish condition. But this to me looks like slowing momentum at the top end of the chart. And to me, I feel like this probably has a little bit of a retracement in it, similar to the S&P. Looking for a retracement at least down into the 9 EMA, hopefully honestly lower than that. I would love to see the retracement come back into the level from these two previous peaks. You can see I have a line drawn here in the sand at about 41,690, let's call it. And by the time price retraces down into that, if we get that retracement, the 20 SMA on the daily chart, this blue line here, should creep its way up and act as support. And that should also give time for the RSI to chill out and not be in that overextended territory. So hopefully allow that to drop a little bit as price comes down. Going out to Bitcoin. Bitcoin is in a fascinating spot to me right now. And honestly, I feel like this has a much cleaner case for the bulls than we've had for quite some time, especially coming off of the 50 basis point rate cut. I feel like people that are in a buying mood are going to gravitate towards higher risk assets. That's a big reason why the Nasdaq looks to me like it has some chance for catch up. And also the reason for Bitcoin coming off the lows in a V-shaped recovery right back up to basically the highs here. We have about 1,000 points to go before we hit the wick high of the previous push. And we are basically holding the highs here. We have the third day, or I guess second day technically, of consolidation at the top end of the range here, allowing the 9 EMA to continue to cross higher. It looks like it's going to cross above our 50-period SMA here, the 50 moving average shortly in the next day or so. So that is a bullish sign as well. And if I had to give a nod one way or the other, I would say we are likely to come back up and at least test that 65,200 level, which is the wick high here. And if we can get above that and maintain a little bit of momentum, there is enough space in the RSI before the daily chart on Bitcoin will be in any kind of overextended territory that I think that we have a chance to push back up into that 70,000 level. So if we can get back above 65,200 on the futures for Bitcoin and close above that level on the daily chart, I do feel like 70,000 is back in the cards. So I am looking for that. MACD is crossing back into bullish territory and looks good there. And if we drop this out to a weekly chart, the weekly chart is cleaning up and starting to look better than it has in quite some time. We are now getting back above the 20 SMA again. We tried to do that the last two pivots, but the difference here is now we have the 9 EMA actually starting to curl higher on that move. And if you see these arrows, the yellow and red and green arrows here, this is a proprietary indicator that I myself have coded and use a lot for my trading. And when it turns green, that is a buy signal. And if you look here at the previous ones where we got back above the 20 SMA, we had some green arrows here, but the RSI here was still in kind of bearish territory and fighting to try to switch between the bulls and bears, but the MACD was still sloping down. Now we have a moment where on the weekly chart, the blue line here on the MACD is looking to cross over the signal line. And when that happens, we will get a green up arrow right here on that chart. And if I zoom out a little bit and then come back in and show you that again, so you can actually see the price chart right here, this green arrow with the green arrow on the price chart itself led to a big run. Now, I don't think we are going to get that big of a run here. I think we are probably coming up to the 70,000 level, and hopefully, in my opinion, we would chill out there a little ways before moving higher, because I really want this market to digest the gains that it has as it moves. I don't want to see just a parabolic rally, because that leaves a lot of people behind. It encourages a lot of FOMO, and then you have parabolic runs that end up selling off hard. And I want this next move to be sustainable. So looking at this, I'm thinking up to 70,000, getting that green arrow on the MACD, signaling a return to the bullish nature of that. That would give our RSI on the weekly chart a chance to cross above 50, which is bullish. And then we would have the complement of the green arrow on the weekly chart and dropping back to the daily, continued green arrows on the daily with all of our moving averages clustered below us acting as support. So I really like the look of Bitcoin right now more than I have in quite some time, ever since we entered into this chop 6 months ago. So keep your eye on Bitcoin. Going out to crude light. Crude light story is still one of struggle. Have a diagonal resistance line up here that have not even touched yet or even come close to yet, but we are building some support. We do have our MACD coming up and setting a slightly higher pivot here, just barely, although it looks like it's starting to lose steam a little bit. Our RSI is crossing into bullish territory, but to me, this needs a little bit more development. If we do break out above 71.75, I'm going to keep that as my line in the sand. If we get above 71.75, target is probably back up to the decreasing daily 50 period moving average, which is currently at 74.40. Likely that will creep down probably closer to 74 or 73.75 by the time that we actually get that break of 71.75 and move higher. So we'd have probably about a $2 window there to potentially take a trade. I'm interested in it, but not as interested as the Nasdaq or Bitcoin, but I want to put that on your radar. If we go out to Ethereum, Ethereum is starting to wake up and is a little interesting to me. We have the 50 period moving average directly overhead at around 27.40. I do think that we can get there. Correlates with the top of the chop back over here, and it's just a stone throw away. So any day trading, intraday retracements, I am interested in on Ethereum. Right now, I feel like it's left the station in terms of a profit to loss ratio to be able to swing trade up to that area. But for day trades moving up to that area, I am interested in Ethereum as well. Going out to gold. Gold broke out of a range, came back, touched it, and is now moving higher, also pushing into all-time high territory, price discovery. And honestly, it's going to enjoy the rate cuts because of the impact that that has on demand for precious metals. So I do see higher prices to come. 2,700 is a nice round hole number psychologically. I think we can get there on this next push, but I'm not super interested in chasing it, so I will probably personally just day trade this, if anything, but I do think 2,700 is going to be a gravitational pull for gold. Where do we want to go next? Let's go out to silver. Silver, nice big run over the last couple of weeks, losing momentum here, increased volatility at the top. We have a lot of resistance overhead here. I'm not really sure that there is going to be a solid swing trade on this until we get back above the wick highs here at 32.75. If we can get above 32.75 though, and we put this out to a longer time frame chart, actually we need to go way back. Let's go month maxly. There we go. All right. So the wick high here, 32.75. If we can get above that, next pivot high on our monthly chart going all the way back to 2012, we do have a pivot high just over 35. So a few dollars worth of movement in silver there up to that pivot. And I do think that is the next stopping point for silver. For this, we are overextended on the RSI. The MACD does look like it's starting to run out of steam here a little bit, so I wouldn't mind a pullback into the 9 and then just going sideways for a few days this week, getting through some of the economic data that's coming our way, and then trying to break out hopefully next week for a setup on silver. We'll see if we get that pause or not, but that would be the ideal situation. until we get a little bit more of a pause or a little bit of a pullback. I'm not super interested in swing trading it, but some day trades might look good on silver as well. So keep that on your radar. Finally, going out to UUP, looking at the dollar index, it has held its ground here at support ever since the 50 basis point cut that we had here last week. Had a nice wick down on it, came back up, and is now just hovered right underneath our 9 EMA and our 20 SMA. Have kind of a range here anywhere below 28.40 all the way down to about 28. I'm not going to be surprised if it does anything within that range, that 40-cent range. And I could honestly care less if it does anything within that range. If it breaks out above that level, it's going to put pressure on commodities and start a new bullish phase for the US dollar. That would not be great for commodities in particular. If it does break down below the 28 level, if we zoom out on this chart, there's really no support until we get down to the weekly 200 around 27.26, and that would be bullish for equities if the US dollar broke down here and continued this bearish momentum to the downside. So last but not least, let's go out, check out our heat map real quick. This is a 1 week performance looking at the stock movements from different industry groups from last week. You can see that money was flowing back into the financial sector, back into communications, consumer cyclical, energy got a bid, and tech was kind of a mixed bag. Some of the leaders like NVIDIA that we've had that have really driven the stock market basically on its own for the large part of the last year, still struggling a little bit to get the bid. But I do see that probably turning around this week. Especially if the Nasdaq itself ends up breaking out. I think NVIDIA is going to have to participate in that. So I am keeping an eye on NVIDIA and the tech sector in general. And finally, last but not least, going out to Forex Factory and looking at the economic calendar for the week ahead, we have a decent amount of economic data coming our way. Monday, we have our PMI data. Tuesday, consumer confidence. Thursday, we have GDP, unemployment claims, and a speech from Chair Powell. And then Friday, we have our core PCE price data. So of this, I don't think anyone's really going to care what Fed Chair Powell says on Thursday. I think we got enough of an update on the economy from him when they actually did the Fed rate meeting that I don't see anything changing from last Wednesday to this Thursday substantially enough to make his speech matter at all this week. I do think the unemployment claims is probably going to be the most important thing this week, and then probably following that by the consumer confidence. So keep an eye on those two specific data points this week for indications of what might be to come. As always, guys, trade safe. Let me know if you have any questions. Hit me up in the comments. Please like and share this video. Really, really helps me out as I try to get this out to more people and have a little bit larger reach on social media. Would really, really appreciate it. Take care. Bye.